My dad works in B2B marketing. He came by my school for career day and said he was a big ROAS man. Then he told everyone how much he loved calculating his return on ad spend. My friends still laugh at me to this day.
Not everyone gets B2B, but with LinkedIn, you'll be able to reach people who do. Get a $100 credit on your next ad campaign. Go to linkedin.com/results to claim your credit. That's linkedin.com/results. Terms and conditions apply. LinkedIn, the place to be, to be.
Good afternoon. Let's get right down to business here. We're doing it live, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air right now, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks ending the day lower, but off the session's lows. A big event coming after the closing bell today, and that was the earnings news from NVIDIA. The Magnificent One, the artificial intelligence giant, NVIDIA, coming out with earnings this afternoon. We'll take a closer look at that in just a moment. The Dow coming in for a closing loss of just about 160 points. Had been down about 400 earlier, but did recover in the final hour trading to a loss of just 160. The S&P 500 was down 34 points at the bell, and the NASDAQ closed down nearly 200 points. The Dow was down about 200 in the final half hour of the trading day after previously tumbling more than 400 at the session's lows. After the closing bell, NVIDIA taking the spotlight. Of course, it had the spotlight all day today. The stock ended the day lower, down $2.69 at $125.61. And after hours has taken a more than an $8 tumble to $117 and change, a drop of about 7%. NVIDIA did beat expectations on Wall Street with its revenue outlook, but perhaps by not enough to please the bulls out there. We'll, of course, be focusing on NVIDIA again tomorrow with one of our market experts. Of course, NVIDIA will be trading first thing in the morning, and we'll see some reaction here as all this is digested. The company anticipates fiscal third quarter revenue of $32.5 billion. Analysts had been expecting $31.7 billion in revenue, so that was a beat. But at least one analyst had noted buy-side expectations were around $33 billion to $34 billion, and some were hopeful that NVIDIA's guidance would beat the consensus view by $2 billion. NVIDIA stock down about 7% here in after-hours trading. And NVIDIA's earnings commentary out after the bell also weighing on some of the other chip names. Looks like we see Dell shares down about 3% and Super Micro shares down about 4%. Also in the spotlight this afternoon, CrowdStrike reported better than expected second quarter earnings after the closing bell on Wall Street. That's the cybersecurity company that's been in the news lately. The stock rose more than 3% immediately after the results. And CrowdStrike shares pulling back right now, down about $10 at $253 and change. The stock had closed down nearly $6 during the trading day at $264 and change. Berkshire Hathaway rising today and pushing its market value over the $1 trillion threshold for the first time, making Warren Buffett's conglomerate, Berkshire Hathaway, the 8th U.S. company to reach that status. They're talking about calling it the Magnificent Eight now, adding Berkshire Hathaway to the tally of tech names that have reached the $1 trillion mark. The so-called Magnificent Seven includes NVIDIA, by the way, Meta, Alphabet, Apple, Microsoft, Amazon, and Tesla. NVIDIA, with its earnings news, obviously the one in focus today, but Berkshire Hathaway also moving higher today. Berkshire Hathaway, by the way, is the most expensive stock on the New York Stock Exchange, trading at $696,502. The share was up more than $5,100 today at the close. And the Class B shares, which are a bit more affordable, moved up nearly $4 today at $464 and change. We've seen some wide moves in the cryptos lately. Bitcoin's price dropping below 60,000 recently. In fact, right now below 59,000. We'll take a closer look at that coming up. Nervous times in the Middle East with Israel Defense Forces shooting down hundreds of rockets and drones fired by Iranian-backed Hezbollah terrorists in southern Lebanon this week. About 100 Israeli jet fighters struck more than 40 launch areas, preventing what authorities said was a much larger imminent attack. Another major military operation is underway today, with hundreds of Israeli troops backed by helicopters and armored personnel carriers raiding areas of the West Bank of the Gaza Strip as the war between Israel and Hamas rages on since the Hamas attack on Israel last October 7th. Meanwhile, a Greek tanker attacked by Houthis in the Red Sea appears to be leaking oil. I'll discuss all of these major developments with oil analyst John Kilduff, and again, Capital and CNBC contributor who will be joining us live later this hour. And tensions rising in the South China Sea. New concerns now that the Philippines could be the next Ukraine, with analysts saying the risk of an attack by China in the Philippines is rising. China's government recently said China's taking what it called countermeasures against 2 Philippine military aircraft in the South China Sea, and the Chinese Coast Guard rammed 2 Philippine boats. I'll discuss all that with Gordon Chang, China expert and author of The Coming Collapse of China, the Great U.S.-China Tech War, and an X formerly known as Twitter at Gordon G. Chang. But first, on your money, the markets and the economy, the whole works. It's time now for a Frank and Stein conversation. Yep, with the one and only Ben Stein, financial and political commentator, author, economist, attorney, game show host of Win Ben Stein's Money, actor too, playing the economics professor in the movie Ferris Bueller's Day Off, and one of the most famous scenes in American cinema. Ben Stein, thank you very much for coming to the line for Frank and Stein this afternoon.
Always a great pleasure. Never more so than today.
It's been a while since we chatted behind live microphones. Want to get your impression of the latest news, and certainly a lot of attention focused on the presidential campaign, especially on the economic front. Why don't you size that up for us, first of all, with the Democratic candidate supporting this tax on unrealized capital gains and so forth. Give us your impressions of that big story as well.
It's an insane idea. It's an idea designed to prevent human beings from saving and providing for their future and providing for their children's and grandchildren's future. It's an idea born in hell by people who belong back there. I don't see what possible utility it can be except to make poor people who are already envious of rich people even more envious and angrier, and there are no pluses there. I don't know how much they calculate they would be able to raise from this, but however much it is, it's not enough to destroy the basis of the capitalist free market system, which this is aimed at doing. I mean, this is, if I may say so, and I don't wish to say that anything is perfect in this world, but I think this is a perfectly ingenious idea to wreck the free market system. And I'd be awfully curious to know the genesis of this idea. I would guess, and I could be wrong, that it's some Marxists in the Democrat Party, and I don't know what to say. I think even Marxists would have a hard time rationalizing and explaining such a stupid idea.
All right, there's that idea. And then the idea of raising taxes just overall is the other thing that's on the table here. Maybe you can give us an economics lesson, as you did in the movie Ferris Bueller's Day Off, on trade policy. Give us your impressions here of what's emerging as the difference between what's on the table on the GOP side and what's on the Democratic side.
I think the situation is bad any way you look at it, because we've just been spending too much money as a nation, as individuals, and as a government, and now we have to try to play catch up. Otherwise, the indebtedness of the country will be so deep that we will never ever catch up. And I don't think we are ever going to catch up, frankly. And it's an unfortunate situation, but we've been like, what should I say, like a reckless playboy, and now we find ourselves in a very deep hole. I don't like any of these ideas, except I think we're going to have an overall tax increase on everyone. And I hate to say that because I don't like paying high taxes either. I'm not an idiot. Well, I guess I'm not a complete idiot. I don't like the idea of Americans being even more heavily taxed. But we have certain incredibly important obligations that we have to take care of. I'd say, of course, the number one is defense, but there are many others as well. We live in a difficult world. We've been behaving as if we were Peter Pan, somehow immune from reality and from gravity, but we're not. We're not immune from gravity, and the gravity of the world situation is extremely serious. And if I may say this, I don't wish to offend any of my dear friends in the world. It started with the supply side mania, and that idea was that you could actually make more money if you lowered taxes than if you raised taxes. And it was an interesting idea, and I give credit to Mr. Laffer and Mr. Mundell and the other people who thought it up. It was an ingenious idea, but it didn't work, and it's unfortunate. But we find ourselves really, 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 really deeply in debt as a nation and as individuals. And how do we dig ourselves out of that hole? I don't know, except the usual way is with higher taxes. But nobody likes taxes. I certainly don't like taxes. They scare me. They upset me. I think they discourage people all over the country. And but we've just gotten ourselves in way too deep. And I'm a Republican. I've never voted for a Democrat, and I doubt if I ever will. But I think we, as Republicans, made a very, very serious mistake jumping into the supply side, a swamp, hook, line, and sinker.
We're on the air live with Ben Stein for our Frank and Stein conversation here. And Ben Stein, the value of the dollar has been declining lately. Gold is at this moment hovering at or near a record high here. What do you see ahead for the dollar and the impact of the policies that you just described? Also, of course, inflation still a big concern. I see one analyst today put out a note saying that the Fed could end up being too early to the rate-cutting party. Interest rate cuts could spur a reacceleration of inflation, possibly. So give us your impressions on that front.
It is so incredibly difficult to predict interest rates or the effect of interest rates on prices or on the economy generally. It's almost comical for anyone who takes the subject seriously to believe that we mortal human beings or human beings who have AI or anything else in the way of gadgets could predict the future of prices or of anything really important. We can't. I mean, the bad results of trying to predict and trying to control are just littering history. And this is another one. We just don't know what the effects will be of lowering taxes still more. And I have a number of close friends who are supply siders, and God bless them. I love them a lot. They're nice people. But the idea that they are going to raise more money by lowering taxes, I think, has been disproved over and over and over again. I don't doubt they're fine people, but their idea historical, examples are quite dismal, and there's no reason to think they're suddenly going to change. I emphasize again, some of my best friends are supply siders. It's like they used to say, some of my best friends are Jews. Some of my best friends are supply siders. God bless them. I love them all. I hope they have great lives. But the idea that supply side is going to magically lower prices and stimulate the economy by putting us even further into debt, it's just a goo land. It's dreamland. I don't know what to say. The point, I think, for all of us who are listening here in our glorious lives is work and save. There's just no substitute for that. Work and save. There's nothing magical that we can do. Work and save. Right after World War I, someone asked Calvin Coolidge, I think it was, what do you recommend to the American people after World War I, not World War II, World War I, and he said, work and save. And I think that's the idea even now, work and save.
On the air live with Ben Stein, who's a financial commentator, political commentator, also an economist and attorney. So we're going to have you put your legal hat on here. What's your reaction to this ongoing legal drama here playing out? Special counsel reindicting former President Trump with a narrow set of accusations now, a superseding indictment in the January 6th case. Can you give us your legal analysis of what's playing out here and still a sentencing, right, on the table on that other matter for former President Trump? Give us your impressions here of how this legal drama continues to play out.
the Constitution of the United States, which Gladstone, the great English statesman and genius, said was the finest document ever struck off by the mind and hand of mankind at any one time. That the Constitution guarantees due process, which means that people cannot be indicted or persecuted without some very good reason and without some very careful procedures in place to keep the government in check. That's being thrown out right out the window. Instead, what we have is a legal process, or we can even call it that, which involves calling in the might of the federal government on people who have basically nothing, have done nothing wrong except go about their daily lives. And that is a really, really serious matter. Double jeopardy. That's what some of you who remember crime dramas, courtroom dramas, Perry Mason might remember the concept of double jeopardy. That's once you accuse and indict a man or a woman, and then that person is, say, exonerated, then you can't just automatically try him again or her again. That's called double jeopardy, and this is what we're seeing now. It's a horrible double jeopardy situation against Mr. Trump. Let's back up for a moment. I'm not the world's greatest fan of Donald Trump. I think there's many things about him that I seriously question, and I believe I put him in the news headlines quite firmly around roughly 34 years ago, with an article I wrote about him in Barron's about some extremely questionable accounting he was doing for his hotels in New Jersey. And he called me up and yelled at me and said he was going to sue me and ruin my life and so forth. He never did those things, and God bless him. But I'm telling you this to indicate we haven't always been bosom buddies. Very far from it. But here, I think he's really gone off the reservation. And I hate to say it because we have serious business to do here in America.
We're on the line with Ben Stein, who, of course, also known one of the most famous scenes in American cinema as an economist as well as trade expert. Want to make sure that it's you, Ben. I don't know if you've given the lecture on trade policy recently, but you certainly are the expert.
Adams, Adamley, Adamowski, Butler, Bueller, There you go. And my dear friend Frank. Sorry.
Bueller still didn't show up for that lecture, but we love hearing it, and we love hearing the role of being taken for that. Ben Stein, thank you very much for taking the call this afternoon, and look forward to speaking with you again soon for another Frank and Stein conversation. We wish you a wonderful evening, and thank you very much for taking the call today.
God bless you, sir, and God bless America.
Very well said. Ben Stein live with us here, Mottek On Money on 790 KBC. 790 KBC welcomes, want to take a guess on this one, 98 Degrees coming to the Oxnard Performing Arts Center October 25th. Tickets on sale now at AXS.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-795-2222. Tickets furnished by The Canyon, where music meets the soul. Mottek On Money continues here in 790 KBC. NVIDIA taking the spotlight after the closing bell this afternoon, reporting earnings that beat Wall Street analysts' expectations and also provided stronger than expected guidance for the current quarter. NVIDIA stock, though, down about 8% now in extended trading. Looks like earnings per share coming in at 68 cents adjusted versus the 64 cents that was expected, and revenue at $30.04 billion versus the $28.7 billion Wall Street analysts expected. NVIDIA says it expects about $32.5 billion in current quarter revenue versus the $31.7 billion expected by Wall Street analysts, and that would be an increase of 80% from a year earlier. Revenue continues to surge at NVIDIA, rising 122% on an annual basis during the quarter, following 3 straight periods of year-over-year growth in excess of 200%. CNBC notes net income more than doubled to $16.6 billion or 67 cents per share in the quarter from $6.18 billion or 25 cents per share in the year-ago period. Looks like NVIDIA is also announcing a $50 billion stock buyback. Of course, NVIDIA, for the Rip Van Winkles out there, has been the primary beneficiary of the ongoing AI boom. NVIDIA shares up more than 150% so far this year after soaring almost 240% last year. We'll have additional coverage on NVIDIA's earnings tomorrow, of course. NVIDIA will be trading first thing in the morning, and it looks like it's moving about 8% lower now in after-hours trading, down to around 117 or so. The Dow, meanwhile, pulling back 160 points today, down 159 to be precise, at 41,091, coming off an all-time high. The S&P 500 down 34 at 5,592, and the NASDAQ down 199 at 17,556. The yield in the 10-year note at 3.81%. Bitcoin right now hovering at around just below 59,000. Ethereum at 2,522, and Doge at 10 cents. And now the latest news here on 790 KABC. Mottek On Money continues here in 790 KABC. We're watching the price of oil nervously again. Nervous times in the Middle East, with Israel Defense Forces shooting down hundreds of rockets and drones fired by Iranian-backed Hezbollah terrorists in southern Lebanon this week. Another major military operations underway now, with hundreds of Israeli troops backed by helicopters and armored personnel carriers raiding areas of the West Bank of the Gaza Strip as the war between Israel and Hamas rages on since the Hamas attack on Israel back last October 7th. Meanwhile, a Greek tanker attacked by Houthis in the Red Sea appears to be leaking oil now, and Libya's eastern government says it's shutting down crude oil output and exports as a struggle with its Tripoli-based rival for control of the Libyan central bank, and that nation's oil riches threatens a new round of conflict there. Joining us live now and following all of this closely with us is oil analyst John Kilduff at Again Capital, also CNBC contributor and longtime contributor to this program. John Kilduff, thank you very much for coming to the line this afternoon.
Good afternoon, Frank. Great to be with you.
Likewise, give us your reaction to all this latest news here, first of all.
Well, it's interesting. One thing, as you were reading that all off, one thing about crude oil, one thing there's never a shortage of, Frank, is issues for this market. As you just enumerated there, the situation in the Middle East with Israel, Iran, Hezbollah, Hamas, Iraq, potentially in the mix here in Syria, region-wide conflict. There's a potential parade of horribles here that could seriously disrupt global crude oil supplies. The good news is that up until right now, that's all it's been, is a concern. Nothing has materialized in terms of physical supply disruptions. And we're also learning over the past several months here quite a bit about the Iranian temperament and ability to take, really body blows in terms of what the Israelis have done to them, in terms of shooting down their barrage of missiles a month or so ago that were set to attack on Israel, and the killing of the Hamas leader in Tehran itself recently. Still no response from Iran, really, from any of these things that have occurred, except via their proxies, like what the Houthis are doing, as you mentioned, in the Red Sea, and other sort of minor activities. So the oil market continues to be very nervous. I will tell you the news about the Libyan oil disruption that came earlier this week did send oil prices, soaring, $2 to $3 a barrel for a time. I will tell you, though, in the ensuing 2 days, we've given most of all of that back already, because, especially for me anyway, Libya's production has been so intermittent, it's hard to count it either way. When they're on producing and exporting, great, the market can be settled and go down a little bit. When it goes off, there's a little bit of scare for the market, but then you look around, tally it all up, and know that we'll pretty much be okay still, despite everything that's going on. So, but we're still at an elevated level, Frank. Average price of gasoline in the United States over $3 a gallon. WTI crude, West Texas crude, hovering near $72 to $75 a barrel. I mean, to me, that's not cheap. So we're in the thick of the uncertainty right now.
On the air live with oil analyst John Kilduff, and thank you for that thorough analysis of all the major developments. We see the price of oil, the Brent price, just above $78 a barrel, I believe, and in New York, about 75 or so. Where do you see the price of oil go from here?
Frank, I think this market is ready, willing, and able to break down lower. maybe appreciably lower. Certainly below 70 for the West Texas crude, the New York traded crude. Brent even could flirt with the $70 a barrel as well. The reason being is that, the demand side of this equation, particularly out in Asia, where you're seeing China's economy struggle, the Japanese economy still wobbly, and the South Korean economy as well, doing just okay. There's no sort of indication that there's going to be demand from those three key demand countries that's going to upset the balance materially. And now we're going into a lull in terms of demand here in North America and the United States as we put the summer driving season in the rearview mirror. And OPEC itself they're dying. They're chomping at the bit to put more oil on the market themselves. There's a plan still to have OPEC plus increase production at the very end of this year. So all of those things are combining to keep a lid on prices despite all the things we're worrying about. If we get a peace deal, I know you and I have been talking about a potential Israeli peace deal for months now, literally. It keeps coming to very close and then runs away from us. If it comes to pass, you're going to see crude oil prices move appreciably lower, and that's what I'm looking for.
On the air live with oil analyst John Kilduff. Curiously, we're hearing from Sacramento today, Governor Newsom now considering calling lawmakers back to the state capitol later this fall. A special legislative session would revolve around proposed new oil and gas regulations, plus other energy and utility-related proposals. A TV station in Sacramento first to report this, which Newsom's office later confirmed. A lot of talk about government intervention in the markets these days. Oil, by the way, has pulled back, but gas prices are still very elevated here in California. We're looking at the regular price here in Los Angeles of $4.57 a gallon, a lot higher than that national average you mentioned earlier. Premium now averaging just below $5 a gallon. What is your reaction here to what's happening in California?
Well, believe it or not, Frank, I support reserves of heating oil, gasoline, crude oil. And I'm as free market as it gets as a commodities trader. So trust me on this. But when it comes to crude oil, for example, and what we saw with the SPR getting tapped, we're up against a cartel globally here that wants to do nothing more than to engender higher oil prices. And I'm talking $90, $100 plus. That's the Saudi goal. That's their aspiration so that they can build out their field of dreams over there. And as far as this gasoline reserve goes, you and I have talked about, to the extent you get a bad weather event or, you're so vulnerable in California because you're really landlocked and away from the bulk of the supply in the United States, I think it makes all the sense in the world to have a reserve of gasoline that could be tapped. Now, do I want to force the refiners to do it? I think there's been other ways we've done it here in the Northeast, like with the heating oil, where an independent or even a refining company steps up and manages it and works it, because actually you have to circulate that fuel through to keep it fresh, believe it or not. But in times of abject supply disruption, which you guys experience from time to time, to be able to tap a reserve of gasoline, I think would be helpful and would ease some of the pain and maybe keep you from getting those $9 and $10 per gallon sticker shocks that some of the crazier stations out your way post whenever they can.
All right, and before we let you off the hook, from an investment standpoint, where would you be placing your bets at this point?
Frank, if there's going to be a problem for the stock market, a problem for the global economy, it's going to be in the energy patch. So these prices we've been talking about, $70 crude oil, it's awesome for Exxon, for Diamondback Energy, for those companies that are traded actively, and for Valero, the refiners. So to the extent there's a problem, the other stocks in the market go down, have some energy in your portfolio, because those could be the only stocks that go up on some of the bad news days because of what's happening in the world, unfortunately. But also, too, they're just going to keep minting money here. This is just a steady as she goes license to just print great earnings, great return of capital to investors. It's the place to be. It really is. It deserves a decent amount of exposure in everyone's portfolio, especially now.
John, thank you very much for joining us live here this afternoon. It's always a pleasure to speak with you and look forward to your updates. That is oil analyst John Kilduff at Again Capital and CNBC contributor and longtime contributor to this program. John, thank you very much, and we wish you a great evening.
You too, Frank. Thank you.
Thanks a lot, and let's get right out to the freeways now. Check your drive here in 790 KBC. Mottek On Money continues in 790 KBC. Good afternoon. Tensions rising in the South China Sea, and there's new concerns that the Philippines could be the next Ukraine, with analysts saying the risk of an attack by China on the Philippines is now rising. China's government recently said China's taking what it called countermeasures against 2 Philippine military aircraft in the South China Sea, and the Chinese Coast Guard recently rammed 2 Philippine boats. Meanwhile, President Biden will speak with the Chinese leader Xi Jinping in the coming weeks. According to the White House, this will likely be the final one-on-one contact between the two leaders before the November presidential election. Joining us live now is Gordon Chang, China expert and author of The Coming Collapse of China, the Great U.S.-China Tech War, and X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for coming to the line. First of all, your assessment of what's happening in the South China Sea.
The Chinese, I think, have decided that Taiwan is too hard a military target, and so they're picking on a weak victim, and that is the Philippines. They need a quick win, and the Philippines might give it to them. So this is, I think, explains why we've seen, especially over the last month, some very belligerent Chinese activities at Scarborough Shoal, Second Thomas Shoal, Sabina Shoal, and some other locations in the South China Sea.
Since you follow this so very closely, tell us about some of the details here involving these encounters. What we saw the 2 Philippine military aircraft involved in one of those encounters, and then the Chinese Coast Guard hitting 2 Philippine boats. What else is on your radar screen on what's happening there?
If we go back to June 17th, which was a really dark day, you had the Chinese seize 2 Philippine craft. There were rammings. They injured 8 Philippine sailors, one of them seriously. And since that time, the frequency of Chinese incursions and belligerent conduct has only increased, especially in the last 10 days. So this shows an up-tempo in what the Chinese are doing. They're starting to flood the South China Sea with more vessels and aircraft, and it looks like they're really trying to provoke a crisis. We don't know if Xi Jinping has made the decision to go to war, but we can clearly see that he's made the decision to risk war.
And tell us about that mutual defense treaty involving the U.S. And the Philippines and its role in what's happening.
Yeah, we have a 1951 mutual defense treaty with the Philippines. Article 4 requires us to come to the Philippine aid if they've been attacked. That treaty, though, has not deterred the Chinese. And the really scary thing about this, Frank, is that even though the Chinese know that we have this treaty obligation and that it is critical to our defense, the Chinese think that perhaps we won't come to the aid of the Philippines, which means that they maybe are not deterred by the United States. And that means that China can do anything and take us by surprise.
What about Taiwan at this point?
Taiwan right now, I think, is relatively safe. And the reason is that the Chinese military is in disarray. You get a lot of generals and admirals who sometimes huff and puff. And they've had these belligerent activities around the island. But when they've had the chance, they have backed off. And that really suggests to me that they believe that Taiwan is going to be much more difficult to take than they have first thought. And we've got to remember that even if the Chinese think that they can annex Taiwan by force, they're going to take casualties which are probably too large for the Communist Party to survive.
We've seen NATO step up its presence throughout that region, including the South China Sea, right? So a lot of potential here for a flashpoint.
Yes, and we also have Australia and Japan stepping up. The Philippines now has a lot of friends, which means that the region is banding together. And it's banding together not because they really want to, but because they feel that China is a threat to them all. So there is this notion of common defense, and that includes NATO countries as well.
All right, and we're watching this reported meeting, what could be the final meeting between President Biden and the Chinese leader. What do you make of this announcement?
Yeah, I don't think that President Biden should meet Xi Jinping so late in his term because he will not be president on January 20, 2025. He should allow whoever that may be, whether it's Kamala Harris or Donald Trump, to set China policy. So I would think that a meeting with Xi Jinping at best is just going to be a show event. At worst, I think is going to, set a course which the next president could easily reverse.
All right. In the meantime, fast forward to the present. Looks like we see the National Security Advisor Jake Sullivan is set to embark on several days of talks with the top Chinese authorities in Beijing this week to deal with some of the tensions here. What do we expect to come out of that?
I think very little. We saw the readout between Jake Sullivan and Foreign Minister Wang Yi. It looked like the readouts from the previous visits. A lot of people say, well, we got to talk to the Chinese at this time, which is very consequential, a moment of tension. But the point is, the more we talk to China, the worse things get. So we need to try something new. And I think what we need to do is tell China that we're done with this, that we're going to not talk anymore. We're going to impose those costs that we absolutely need to do to protect ourselves and our friends and allies, and just realize that the situation has deteriorated that far. Obviously, our policies have made things worse, and we need to change them fast. Otherwise, we are going to be involved in a war with China, and it could be an extremely bloody one because it might not stay conventional. The Chinese will probably use nuclear weapons if they find themselves on the losing side.
On the air live with Gordon Chang. In the meantime, you've written about the tech war between the U.S. and China. And I saw the latest report that Chinese government hackers have penetrated U.S. internet providers to spy. What's getting your attention on the tech front?
Well, China continues to penetrate our networks, and that to me says that we should be building our networks not for efficiency, but for resilience. So this is our country, and it's our fault for letting our networks be so open to China. They've been doing this for decades. It is just, I think the American people need to say to corporate executives and to Washington, we want resilient networks, not necessarily fast ones or efficient ones.
Gordon Chang, China expert, author of The Coming Collapse of China and the Great U.S.-China Tech War. On X, he's found at Gordon G. Chang. Gordon Chang, thank you very much for that thorough analysis. As always, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with the one and only Randy Wang coming up next here. And stay tuned tomorrow at 4. You'll get more Mottek On Money, 790 KBC.
Are you tired of losing your fantasy football league year after year? Lindsey Rhodes, Emmy-winning sportscaster and football analyst, is your new secret weapon on the Believe Fantasy Football Show.
Watch the quarterbacks and his ADP. I think he has massive high-end upside.
Get expert analysis on player rankings.
Wide receiver 22 in fantasy, Cecil Shorts.
That kid can run, so I'm thinking he can have a breakout season this year.
And you can too by searching the Believe Fantasy Football Show. That's BLEAV wherever you listen.